Despite heightened volatility in Indian equity markets, retail investors' confidence continues to be strong. Data released by the Association of Mutual Funds for the month of March showed a continued rise of SIPs and inflows into the Indian equity market. SIPs, in fact, have crossed the 14,000 crore mark for the first time ever and stand at an all-time high of 14,276 crore rupees. Similarly, equity inflows also crossed the 20,000 crore mark compared to 15,000 crores last year. So what has spurred this growth despite volatile markets? Will it sustain? To speak on this, I'm joined now by N.S. Venkatesh, the CEO of AMFI. Of course, we will also continue the discussion with more voices from the industry. But let me begin with you, Mr. Venkatesh, and welcome you to the show. Thank you for speaking with us. Now, almost 6% increase has been seen in assets under management in 2022, while we saw a marginal decline from the month of Feb. Why is that?
Essentially, it is a factor of market movements. Market was very volatile during the month of March. So naturally, the market has an impact on the NAV and consequently on the AUM.
So it's been a good month for equity mutual funds. They've been the highest in a year. On the other hand, we've seen debt fund outflows also increasing. They're at a 6-month high. Why do you see that disparity? And is the debt outflow because of the tax law changes?
Essentially, the equity inflows have been high for the simple reason 20,000 crore has come in. Net flows have come in into the equity mutual funds, and it is because the investors are taking a view that the Indian markets will do well in this financial year. So they have started investing into the equity mutual funds. As far as the debt mutual funds are concerned, the debt mutual funds are because of the budgetary impact. If you look at the budgetary impact, people are looking at the ways and means of managing the debt funds. In the debt funds, essentially there is an interest rate tightening cycle which had happened, and March being a quarter end and year end month, the corporate treasuries would have withdrawn money from the liquid fund and overnight fund to pay off their taxes, and the banks would have taken money out of the liquid fund and overnight funds to manage their capital adequacy. Because of this, you saw a net outflow of 50,000 crore, over 50,000 crore in the debt funds.
Mr. Venkatesh, meanwhile, we've seen SIPs breaking records, and that's the record set in January this year. What do you put this down to? How do you see investor behavior in the first 2 quarters of FY 23-24?
We see a very positive trend in SIP flows. The last year, if you see, at least around 14,000 crore has been there in the last 4 months, and now if you look at this month onwards, we will still see the 14,000 crores coming up. By the year end, we believe that at least the SIP flows should be at least at around 15,000 crore.
And are small and mid-cap funds getting hotter this summer, in your view?
The small and mid-cap funds are also doing well for the simple reason the small and mid-caps had valuations have corrected substantially. So people are now thinking that there is scope for small and mid-cap funds to perform better. That is where the money is coming into small and mid-cap funds.
You know, some interesting data that has come out this time round, and I think we should focus on that a bit as well. 40 lakh first-time investors, 11 lakh new women investors. The total pie, however, is below 4 crore unique investors. Do you see a rapid change in the way the average Indian is investing and engaging with the stock market?
Definitely, the Indian economy is poised to grow and do better in this financial year and the coming financial years. So essentially, Indian markets will do well. If that is a premise under which we are working, equity market will do well because the corporate earnings are expected to be much better, which will ensure that the valuations will also go up and the equity markets will do substantially better. If that is the case, we will see the equity mutual funds grow in the years to come.
Well, we certainly hope so. Thank you so much for speaking with us. That was the CEO of AMFI, Mr. Venkatesh. Now, to take this further, I'm joined by DP Singh, Deputy MD of SBI Mutual Fund, and Kumar Saurabh, founder of Scientific Advisors. Welcome to both of you, and thank you so much for joining us today. Mr. Singh, let me begin, with your take on what this latest data shows us. Is it also reiterating sort of the depth that we're now seeing in the Indian markets, equity investors coming in at a time, retail investors coming at a time of volatility? Are they finally beginning to buy on dips?
Honestly speaking, if you ask me, I am not very happy with the kind of numbers which have come. The 40 lakhs number is not very, very encouraging. If you look at the overall pie size, see the kind of numbers. Today also we are having less than 4 crores unique investors in mutual funds. If I talk about even only State Bank of India has 45 crore accounts. So 44 crore of number of investors, the numbers have to be much, much more. Though we are looking relatively, it looks good that we have better number than last year. But I think penetration is still very low, and the industry needs to do much, much more than what it has done till now.
It's an interesting way to look at it, that we are growing but not nearly enough. I think also at the context, if you can look at the context right now, Mr. Singh, traditionally equity investors start panicking the moment markets show a little bit of volatility. They start withdrawing their funds or stopping their funds. We've not seen that happening here. Is there a change in the way investors are looking at mutual funds as an opportunity for wealth creation?
But definitely, see, the investors have evolved, a lot of education has happened. If you look at it, the overall in the whole year, the total SAP trigger amount is almost 1,46,000 crores in equity side. 1,46,000 crores, and the total net flows in the industry is 1,54,000 crores. The whole year money has come as through either SIP or STP. STP is systematic transfer plan, which is added into the SIP numbers only. People are putting money in equity market because of volatility in staggered manner, and that's a very, very healthy sign. That shows the involvement of investors. They are not going whole hog. They are putting money in a staggered manner, and that's the way to go for the investor. But this number of 1,50,000 crore overall, 1,54,000 crore for the year, and 20,000 crore for this month, out of which 14,200 is only the SIP inflows. 6,000 crore of total difference which is there come in during this month, and that has happened because of one or two NFOs. Like we had one NFO which collected 3,700 crore rupees, and that data came in March. Other than that, the total inflow is around 2,000 crores for the month of March, other than SIPs. So we have to make little deep dive and look into the numbers. But yes, I congratulate the Indian investors to who are doing it in a very, very structured, very staggered way.
Let me come to you, Mr. Kumar Saurabh, on what this AMFI data is really telling us about investors. And I want you to focus on the debt fund outflows that we've seen. Do you think that's a seasonal thing? It tends to happen in March. And is it an impact of taxation norms that have changed, which will persist?
I think definitely it's more to do with the impact of the taxation which has come. But even from equity side, if you see the current correction which has happened, so partly you can say it is because of the impact of taxation, but at the same time, the 3 months of correction which we went through between January to March, I think that could also be a reason. And it's not like the retail investor has done it only this time. If we look at the whole 2022, that was the year when we had one of the worst FII flows. And the biggest of the FII flows happened in banks. Almost 50% of the FII flows which happened, it was through the banks. And still, the banking sector did well just because the DIA, which is the mutual funds, they kept on buying. So the behavior of the retail has been good, which is reflected through the SIP data throughout the year. And the movement of the debt fund, I believe it's partly due to the whatever came out of the budget, and at the same time, the correction which has happened in equity market.
DP Singh, I'd like your view as well on the debt fund outflows. Do you see that as a persisting problem?
No, I don't think so, because I had looked at the debt numbers on the liquid funds and the other funds separately. The maximum outflow has happened out of the overnight and liquid funds. The longer duration, medium duration fund, they have not seen the outflow. Actually, because of the tax laws, during the last few days, a lot of inflow has come rather than outflow. Had those changes not been there, I think we would have seen a higher outflow number in the last few days. Actually, 30,000 crore new money came into duration funds and the target maturity funds and so on and so forth. I mean, other than that, had it not been there, then I think the month would have seen higher outflow than what is being seen now.
Yeah, that's fair enough. People wanted to lock in that long-term capital gains reprieve that
Yes.
would expire after the 1st of April. So they got that push to put that
Yeah.
money in. But the question, though, Mr. Singh, is
Yes.
that now that sort of window has passed, do you see an impact of the tax changes on this category?
No impact on the HNIs and ultra HNIs, definitely it will be there, but still putting money, see, the debt fund inflows in the longer duration are always a cyclical thing. At this point of time, when RBI has already pushed the pause button and the interest rates are likely to go down, this is a good time to put in money even now. We are seeing inflows even at this point of time without the tax arbitrage also. Because if the people want to play duration, they have to play through mutual fund only. Whatever capital gains have to come are most likely to come in next 1.5 years. So the old investor will continue to put in money irrespective of whether the tax laws, when tax arbitrage is there or not. Maybe number will come down because very ultra HNI the corporate investors, they may shy away because they have other revenues also to invest.
Exactly. Kumar, Saurabh, advice for our viewers, for investors, and also a commentary on the fact that index funds continue to be very, very popular. Is that the way to go in your view?
I believe so. And if we look at the markets, basically we talked somewhere around October to December 2021. And since then, it's almost 1.5 years. And the small cap index is down by somewhere between 16-17%. Nifty has been flat. And usually, whenever historically we see we have spent these kind of times, the next few years have been good. Even valuation wise, when we see we have come in the fair value zone, where if we look at Nifty 50 or Nifty 500 or small cap index, from a frothy zone to somewhere where they are somewhere between 18 to 20p, which is decent. Now, talking about index fund, this is a trend, and this is something which is happening in India, but it has happened. If we look at the developed economies, also, this is the trend which has happened. If we look at the US data, this is how it peaked, and basically the shift from active managed fund to passive managed fund, the shift from higher to TER to lower TER, these things they have played in US market, and similarly it is happening in the Indian market also. And my view is this will grow further, and we will see more product innovation, we will see more kinds of index funds, we will see more kind of ETF funds coming in market in the future.
Absolutely. Well, good data for now. But as Mr. Singh said, there's a long way to go. There's a lot more scope as far as mutual fund investments are concerned for Indian savers. Thank you so much to both of you for joining us today, and let's